Okay, Brian, if you want to already share your screen.
Yep.
And we can get this show on the road. Hey guys, it's gonna be maybe just 30 seconds for us to make sure everything's working. Check the stream quality, Brian sharing his screen, everybody opening their notes, and we can get this show on the road. Welcome to everyone just joining us. All right, I think I'm gonna start it here, and then as people pour in, we can kind of introduce them to what we're talking about. So, all right, hello everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Santiment team and community members come around and discuss recent crypto market events from a fundamental perspective. So, if you have never used Santiment before, check out app.santiment.net during or after this call. We've got dozens of tools, custom metrics built around three main sources of information. These are on-chain activity of the coins, social media activity of the coins, and the development activity of the underlying projects. So we have developed over 100 different metrics using these three sources of information with the goal of helping you better understand the crypto market and the behavior of its major participants. So I suggest checking out santiment.net during the call. Also, if you don't want to wait until next week to talk about the market with us, just join our Discord. We talk about these types of things pretty much every day on our trading channels. The link is going to be in the description of this video. Don't hesitate to reach out to us in our trading channels, for any sort of questions or, ideas that you have about the market and you need some validation or somebody to tell you that we think you're wrong. Let us know and we'll be happy to do so on our Discord. So today the sort of title of the call is what is needed for a market-wide bounce back, and we're going to cover a variety of topics today. We're going to obviously start with just a general market breakdown, and then we're going to talk about the latest fundamentals and what we've seen in terms of Bitcoin's and Ethereum's on-chain activity. We're also going to be talking about several ERC20 coins that are showing some interesting, fundamental activity over the past couple of days. And then we'll just give a brief sort of tease about the new Pro report that is going to be going live today, available to all Sandbase Pro subscribers on the Uniswap token and how it has kind of evolved over the first 10 days of its existence, basically. Then finally, after that whole charade, which is going to probably last for about 30 minutes, we are going to be taking audience questions, guys. So any sort of coins or assets that you want us to take a closer look into that you think might have a strong bounce back potential or you think might be headed for another correction, let us know in the chat and we'll get to hopefully all of them by the end of the show. We always leave some room at the end of the show to tend to audience Q&A. So any type of ideas or coins that you would like us to examine and do some impromptu analysis at the end of the stream, let us know and we'll get to that later. So without further ado, Brian, I think you're already sharing your screen. So if you want to start us off, go ahead, man.
Thank you very much, Dino. Hello, everybody. Hope everyone's been well. It's been a rocky week in crypto, to say the least. We've had what I'll show in a second to be a pretty red week overall, especially for altcoins. But as we can see, we're starting off with just the last 24 hours, and we can really see that the mid and small caps in particular have rebounded nicely. Nothing absolutely excessive, but over a one-day span, this is pretty encouraging to see for many altcoins that we're getting pretty flushed down. And this comes at the around the tail end of a pretty negative sentiment week where a lot of people were saying, we're definitely going below 10K with Bitcoin, Ethereum's going sub 300, and therefore the rest of these altcoins were really going to drop hard. But as we often see, the markets generally fluctuate against the grain as much as possible. And when the crowd starts to think that it's time to sell out and wait for a lower price, the markets say, no, we're going to do the opposite and punish you for exiting your positions. And over the last 24 hours, as we can see, we had a few notables like ABBC, we had Arweave, and then we had Cardano here as the lone, actually not the lone, there were two in the top, in the double-digit returns on the positive side, Cardano and Chainlink being the other. We also had Theta over here that had a really big day, and that was sort of along with Chainlink and along with Band and REN, there were some big bounces in volume and address activity, which I'll get to toward the end of my segment here. Moving over to the 7 days, what you can do, by the way, you can open up this link. I put it on Twitter a couple days ago, and it's a public screener. You can also just make your own by going to screener, create screener, and you can just have no filters on, and you'll be able to replicate exactly what I'm looking at, which is just all projects that Santiment covers. So for the last 7 days, as we can see, Ethereum really took a hit, down double digits. We also had DOT, we had Binance Coin, several others like Tezos and Neo, very popular assets that really got hurt as Bitcoin was declining and looking like it might head to 10K and below. That's when the altcoins really just dropped off a cliff. And as is often the case, you know, Bitcoin doesn't get hurt nearly as much as the rest of these projects. Keep that in mind. And a lot of Bitcoin maximalists will let you know that the safest option, relatively speaking, in crypto is to stick with Bitcoin when you are worried that markets are going to go down. This past week was no exception to that. So we had NXM, we had Wi-Fi with two eyes, and we had Balancer along with Wi-Fi with one eye as kind of the biggest losers of the week. But you know, obviously with Ethereum down double digits, any F-based project tended to get pretty hammered. You know, there were a few exceptions. We had Celsius, which for a second straight week had a pretty enormous, you know, positive return, and we had the Midas Touch Gold, you know, which I know very little about, as kind of the leader of this week. And you know, they were obviously in the minority, these positive return projects. So yeah, kind of a rocky week to say the least. We saw much more volatility than we have in quite a while, and you know, September in general has been more volatile, but this past week has been no exception to that whatsoever. So moving over to our divergences. Many people, first off, have been asking about this. I just posted about this in our general Discord. We've been getting some weird results for many of you when you refresh on your own and you're looking for the current projected day. So right now, because I'm the owner and I made this model and I refresh, everything is accurate because it will read when I've last refreshed right here. And these two cells are used to calculate how far into the current market day we are, and thusly be able to figure out the on pace address activity that we're going to see based on math that's calculated through the percentage of the day that's happened. So when you refresh, these don't update, but the actual data does. Therefore, you'll often see much greener days than usual. Sometimes it might even overlap and think it's the next day. I would just advise in the temporary interim to ignore the current day if you're refreshing on your own. And I'll still be posting frequent updates about what the on pace looks like for the current day. But overall, just try to ignore the current day for now until we get that resolved, and we'll eventually have these charts in some form on Sandbase. So keep that in mind. And of course, every Friday we'll keep you up to date on how it currently looks. So right now we're actually having a positive day for Bitcoin. More than usual address activity is happening on the network compared to what we see at these price levels. Therefore, we're probably more likely to have a little bit more of a climb until this either evens out or address activity drops off, whatever the case is. This is an encouraging sign after we had, you know, over a month of bearishness. We had the bullish bounce, and then we kind of had a little bit of polarization here that was looking a bit more bearish. So based on what I'm seeing, we're in a pretty normal, expected, healthy spot with just a slight amount of extra address activity going on. But, you know, the rest of the altcoins are really going to rest on this. And right now we're pretty close to neutral, if not just slightly above. And when that's the case, I just advise, you know, keeping an eye on this and keeping an eye on the projects that you believe in most, and actually using this compare table here to identify what the best opportunities are. Right now, very few projects are in the positive. I can actually, I won't do that because I don't want to mess with this. And every time I change anything, it's going to update the actual time, but I'll just do it this way without sorting. Synthetics, REN, Litecoin, obviously we went over Bitcoin, and Binance coin, interestingly. I want to highlight that for a moment. Binance coin had been on about a three-week bearish pattern here, and it mostly did what we expected, especially once it topped off here. The bearish divergence had already been going on for about 10 days, so it was saying that a retrace was imminent, and sure enough, there was that big drop off between the 14th and 15th where it dropped almost $4, and then it continued its decline all the way until it hit actually 22.85 or so. And this is the first day that we're seeing it on pace to actually be bullish, meaning a bounce could be starting to form here, but it's too early to say, and we'll want to wait for the last, looks like 10 hours before market close before we make any real assessments here. REN, as I mentioned, has had a really nice bullish pattern showing, especially the day it bottomed out on the 23rd, just a couple days ago. We saw a clear sign that it was going to have a little bit of a bounce coming up, and sure enough, the next day it went from about 16.9 cents to 19.5 cents. So really nice bounce there. And now we're seeing it try to retrace a little bit, but I'm still seeing bullishness. Obviously, it was showing plenty of bullish bars throughout this decline, and keep in mind that that was likely due to simply being attached to Bitcoin with these big red bars, and Ethereum being an ETH-based project having these red bars, and even just some minor ones over the last week or so. So oftentimes, as I mentioned, with altcoins, you have to take these with a grain of salt, and it all depends on whether Bitcoin and Ethereum are healthy enough to not dump and bring down projects that are having good address activity with them. But now that things are looking at least neutral for Bitcoin and Ethereum, it makes it that much more important to look at these charts, because now they can actually come to fruition a little bit more. So I like what I'm seeing with REN. I think it's kind of neutralized after this bounce here. So we'll have to see if things start to pick up over the next few days. But it's encouraging to see. And I think synthetics has a similar story.
Hey, Brian, before you move on, maybe this is a good time to expand a little bit on REN and what we published yesterday as an insight. If you want me to take over for like 5 minutes and show a few more metrics on REN that might be interesting to people, I can do that now before you continue.
Why don't you take over? That's totally fine. And just when you're done, I'll pop back in, finish the DAA divergence, and we'll move on.
Yep. Okay. Sharing my screen. Okay, so I just wanted to add on to what Brian was just saying about REN. Yesterday, Gary published a very good article, detailed article on what we were seeing in terms of REN's fundamentals and where we think or why we think it might be priming for a bounce back. Maybe not just yet, but it's definitely going into that territory, it seems, at least as far as its fundamentals are showing. So a few different points that Gary brought up in his article. Number one being the fact that we have definitely seen an increase in the amount of deposits and general exchange activity of REN in the past couple of days, as REN finally kind of went below 0.2 mark, pointing to a little bit of sell panic and in general quite a substantial amount of pain being felt by a certain amount of REN speculators, which is always, it's actually good to see. If you want to see a strong bounce back, and there's usually some sort of a weekend exodus before we can really push onwards. So we can also see this as on the supply and exchanges chart. So this is the amount of REN on exchanges over the last 3 months. Now, what you will see is this massive drop off in the actual amount of available REN to trade on centralized exchanges, coinciding with the price rally. This is a pattern that we very often see. As there's a diminishing sell side pressure and there's less amount of a specific coin available to trade, this can coincide with price breakouts, because it allows, assuming the demand is unchanged, this can inflate the price of actually available coins to trade further. So what we've seen recently is, number one, we've seen the one spike in the supply of REN on exchanges here around its August top, which is just indicative of general profit taking, and then we saw a pretty quick correction since. And then once again, we had this period of a dormancy or a declining amount of REN on exchanges. However, more recently, we've had two panic sell-offs here, which once again point to sort of increasing pain and some sort of weekend exodus among REN users, coinciding with, first of all, the market-wide breakout here, or sorry, market-wide crash, and then this latest drop below 0.2, which has been a contentious point for REN in the past. So definitely signs of worry and concern among some REN speculators. Once again, here, if you look at the amount of REN being held by the largest non-exchange addresses, we can also see periods of sell-offs here, and a bit smaller here, but still there's a discernible decline in the combined balance of the biggest REN whales, pointing to the fact that even REN whales were looking to offload some of their bags for the time being. Now, I'll skip a few metrics because there's a few of them. There's a lot of them, so I don't want to spend too much time on it. If you want to check out the entire article, I strongly suggest going to, if somebody can share this in the YouTube channel, that would be great. Going to this insight and reading the whole thing. So while we are experiencing decent amount of pain among some REN speculators, at the same time, the amount of actual activity on the REN network remains relatively high. So the fundamentals, as Brian has showed, the fundamentals are remaining fairly strong. The amount of daily active addresses here, as you can see, generally tends to hover around the 500 level and above, which is super impressive for an ERC20 coin. I think if you were to look at the amount of ERC20 coins that had more than 500 daily active addresses on average in the past, let's say, a month, that would be a very short list, maybe a list of 10 to 15 different coins. So yes, we are definitely in a decline in terms of daily active addresses, but this was to be expected given just the amount of hype around REN and DeFi projects during the July and August period. Here we are seeing some sort of a normalization of on-chain activity, but the on-chain activity remains fairly high. On the other hand, the amount of value being transacted on the REN network also remains high, as expressed through on-chain transaction volume. So around $11 million a day is still being exchanged between network addresses, pointing to the fact that even though there are some short-term sell-offs, the general fundamentals for REN remain fairly high and fairly strong. So if we were going up based on these and other metrics that we show in this insight, REN is kind of, or might be prepping for a short-term bounce back. It's there are some levels that we might want to see go a bit lower, like for example, it's MVRV, or the average profit or loss of short-term and long-term holders, which is kind of approaching levels at which we usually bounce back. As you can see here during the Black Thursday crash, we kind of approach similar levels of MVRV before a bounce back, but we could dip a bit lower. We're still not at like historical lows, but we're very close. So in short, there is a certain amount of pain and panic selling being sort of materialized on REN's charts, but at the same time, the general amount of on-chain activity and standard fundamentals for REN remain strong. If this continues in the next couple of days, we could, barring some sort of crazy market conditions, we could see a nice sort of push upwards for REN. Obviously, it's not financial advice, and there's still a few signals that you should keep an eye on. But for more information, check out this insight to get a complete look at why we think REN might be approaching some key breakout or bounce back levels. And with that, Brian, I'll hand it back over to you.
Cool, thanks, Dino. And I'll add on to what Dino was saying about address activity and overall increased activity here with a chart that I posted out on Twitter yesterday. So what we're looking at here is a comparison. Make sure I have the colors right. We had REN in red, band in green, link in yellow. You can't see it when you go full screen. Actually, you can right there anyway. So yeah, you can see REN in red here. It took off in transaction volume right about the beginning of about 48 hours ago. And with that, the price continued to fall, and the volume sort of increased moving into the drop, but it stayed high, and it actually increased to a week high by far. It was already at a week high about right here, but it really increased to almost a month high right around here. And with that, along with the volume of Link, the two assets just surged, and Band, which many of you may know, sort of follows in the footsteps of Link often in terms of price. Band was able to take off despite not really getting that same volume increase. But these were three big ETH-based projects that are popular within the community that all kind of took off, simultaneously for differing reasons. Link and REN mostly for volume reasons, but like Dino mentioned, the address activity for REN is still looking quite stable, and it's staying high compared to where the price has pushed downward to. So just to wrap up what I was already saying on the DAA divergence side for it, we got that big green candle for the first time in about 2 weeks, and that sort of triggered this bounce. And we just need to see a little more divergence now that it's up, especially for today. It's on pace for just a slight mild bullish divergence day, but that's kind of been the norm for so long that we'd like to see a little more for the model to really indicate a confident push upward will continue through the weekend. So yeah, keep that in mind for REN. I do want to cover a few different assets here as well. Synthetics, sort of in a similar position. It saw a very big bounce from the 23rd until now, where it's up from 370 all the way up to about 461. I really like it. I think that with these green candles, we'll continue to see a push as long as Bitcoin and Ethereum stabilize. The other one I wanted to show was not Litecoin. We already looked at Binance Coin too. Yeah, we'll wrap up the DA divergence so we can move on to a few other things at this point. But if you do have more questions, just let us know in the Discord channel, and we'll be happy to look at a few on pace metrics that are showing up for these assets here. NVT, really quickly, nothing has really changed since last week. We're still on pace for a fourth straight month of not so great token circulation for Bitcoin. I did see that the past couple days were looking pretty good. Hash marks well below these trend lines up here. Let me full screen, by the way. Max, I know you're watching somewhere wishing that I was doing that, so sorry. Yeah, fourth straight month right here of bearishness, and today is actually looking a little less promising, but it's still early and the on pace could even out. So take this one with a grain of salt, and I do like the encouraging signs from the last two to show that we could actually trickle down right below the trend lines. It's really hard to see. If I could zoom in really quick just to show you where the trend lines are, and we're literally just barely above it to qualify as bearishness here. So it's very close to actually becoming neutral, and we'll see how the month closes out there. And that's actually key, because if we're starting to get neutral, then the month of October is going to look a lot more promising based on the historic predictive power of this model. And yeah, for Ethereum, really quickly, it's still going great in terms of token circulation. But as I mentioned, for those of you who read the Bold Predictions article, you have to take this with a grain of salt, because of the fact that a lot of Ethereum's token circulation is related to DeFi and other ETH-based projects, and simple transferring over time is showing up as token circulation for Ethereum, when it's actually more so other ETH-based projects being moved. So there might have to be a long-term solution to give a more accurate assessment for Ethereum. But overall, I mean, it's still an encouraging sign to see that the network is being used for so many other umbrella projects within the Ethereum network. So keep that in mind. Nothing too much to update though since last week. Top holders, wanted to look at just a couple of projects really quick. We had REN here, continuing to see the top 10 non-exchange addresses accumulate more after a very mild drop off over the past few days, it's still up 3.8% for these top 10 addresses just over the last 30 days, which is rather significant. The top one up here is storage, which is interesting. And I have storage highlighted over here. You can see that address activity has been nothing special. I'll zoom out just a little bit. Yeah, these big orange days, this is normal for storage. I don't know if it's something internal that they do with the project, but it looks like just about once a month or so, roughly, they have just a gigantic address activity day, which I still haven't figured out. This can be somewhat common with really small projects, and until they become saturated enough, single, movements from internal activity, processes that they do can have these huge orange bars come up and just dwarf everything else. But regardless, you can see the pattern here has been that it's sort of declined a little. However, I think that we're getting this price uptick because of the fact that we're getting a huge surge of more and more tokens going to non-exchange addresses, particularly for the top 10. So keep that in mind. We also have way up here hidden sort of behind the legend, we have Fetch, which is up 6.5%, I believe. And Fetch has shown a few glimpses of really good address activity. It had a big bounce right here before dropping off, but considering how much the price has fallen, we're still seeing some bullish divergence even down here. Let me get rid of volume. Yeah, we're still getting some nice traction down here because just 3 months ago, we were at 100, even double-digit address activities. Now we're getting 90, 101, 136. So around that same level. But because of the massive growth that it's been seeing, I still think that there's a good potential here for a bounce. We'll just have to wait and see what happens. But I like the potential. And obviously with the non-exchange addresses, which you can see by going to on-chain, top holders, non-exchange addresses, which is usually the most indicative to see where things go. Look at this massive bounce here. So right around the 7th or 8th, we just had a huge surge and influx of tokens moving to non-exchange addresses, which is a sign that that the top holders, the ones with the most say, believe strongly in holding on to their assets, and they have a strong confidence that it won't absolutely demolish their bags. So this is a good sign for the long term, seeing that we went from about 495.2 on the 5th to about 609.8 on the 23rd. So give or take about 2.5 weeks, we jumped, that's, just mental math, a little over 20% in non-exchange holdings for these top 10 addresses. So very interesting there. Last thing I want to show is the Twitter sentiment for Bitcoin. We can see that it's actually at about a 2-year low. In fact, I believe this is the 2-year low for weighted social sentiment, just by a hair below where it was in September 2019 when the price was absolutely plummeting down to the high 7Ks. So what this means is, socially speaking, people in Twitter don't believe that Bitcoin is going to keep its level above 10K. People believe that it's going to drop and they're going to be able to buy at lower prices. And even though we're seeing this bounce right now, there's just a continued disbelief that this is all just kind of a bull trap and we're going to fall through. Obviously, we're looking at, there are plenty of people who believe that Bitcoin is going to grow, but overall, from a mean perspective, historically speaking, we're at the most negative point we've been at for Twitter in this 2-year span. So this is pretty significant, and it's a sign that if you buy now, you're kind of going against the grain, and you're clashing against what the majority of Twitter believes right now for Bitcoin. And when you do that, you're often going with where the markets are going to head most often, because as I mentioned at the beginning of the call, we go against where markets expect it to go more frequently than not. And in this case, it looks to be a pretty prime opportunity to get in. just from this perspective. Now, as Dino mentioned, if we combine that with something like MVRV, which I'll just show briefly, network value, we'll do 30 days, and we'll also do 1 year. This is another way to sort of assess where people's sentiment is. And right now, if you look at the, well, we don't want link, excuse me. Yeah, right now, we're basically seeing that the MVRV is still above on the 1 year, but it's just about neutral, if not slightly below it on the 30-day. So on the 30-day MVRV, we're about -1% overall for the average trader, about as neutral as it gets. 1 year though, we're still above. So this clashes slightly with what we're seeing with the social sentiment, which seems to indicate that most people believe that we're going to see a drop before we see a rise. When you see the MVRV also negative along with this weighted social balance, I believe, and I think most of our staff would believe, that that's the best social time to get into any asset when those align. And of course, keep in mind, guys, we have this MVR table, which is available to all of our Sandbase Pro members. If you are a paying subscriber, just DM me or let us know in the general chat, and we'll hook you up with this. And what this does is essentially measure what the 30-day price MVRV is for several different assets. And it also compares to their actual returns if you were to have just hodled during that time span. So we also will have one for the 1 year coming up soon. You can look at it from this perspective as well. Let me zoom out just a tiny bit. Yeah. So if you look at it from this perspective, you can actually see every project over time, what their MVRVs were for 1 year. If it's above this line down here at 0%, then it is in profit for the average trader. If it's below, so anything below right about here, these are all opportunities where the 1 year traders are underwater, and you can capitalize on the negative sentiment that is resulting from that. Also, the 30-day one here, you can see that almost all of them, in fact, all of them are underwater right now after a pretty rough September we've had. Bitcoin obviously has held up the best. As I mentioned, it's down just about 0.5 to 1% right now, whereas most of these altcoins are pretty rough for most average traders. You can see ELF way down here after it had like that 2x pump a couple weeks ago. A lot of people bought in at the top. Now they're -32%. Just a lot of interesting opportunities here. So I definitely recommend you check this out and look for projects that have potentially the lowest MVRVs on this list. Because as someone mentioned in our general chat earlier today, anything below about -0.4, -40%, that's pretty much the limit we see, especially on a 30-day MVRV. If it goes below there, it's almost a shoo-in that it's going to bounce. And anything from the -30 to -40 range, you know, can pretty much have that same thing be said. So just let me know if you're interested. I'm going to wrap up my segment here, and I'm going to send it back to you, Dino.
Thanks, Brian. I think we're about half an hour in. So guys, I think we should already start taking some of the audience questions. One of the things, let me share my screen. 1 second. Yep. One of the things that we got asked is the Bitcoin dominance chart. So Max, I know you mentioned you didn't prepare too much for the call, like in terms of what you wanted to show or whatever, but I know this is one of the charts that both you and I kind of keep an eye on every now and again. It bounced back. I think.
All right, I understand now this dominance. Yeah, indeed, we've been mentioning it quite frequently.
Yeah. So we were last time we were concerned about Bitcoin's potential was here. This is actually the last time I think that we even mentioned the Bitcoin dominance chart. Is that it was around these tenuous levels here around 60, 59, 60, right? And we said that this was sort of a support level, similar that sort of needs to not be broken in order for us to escape this sort of market-wide crash, right? So since then, Max, we've kind of stayed above the 60 mark. So currently we're at the 61.47 mark, which is you know, relatively high given the fact that we were down as much as 59 on September 12th. So over the past 12 days, basically over the past 2 weeks, we've kind of added 2% to Bitcoin's market cap dominance, pointing to the fact, which I think a lot of people have already kind of seen on the market, that BTC hasn't really done all that much in terms of its price action in the past couple of weeks. It's kind of been consolidating. It has risen a little bit over the past 24 hours. However, alts have continued to dump, right? And have continued to kind of pretty much lose the big alts like REN, Link. What else have we been looking at? Land, 0x. Many of these coins have now kind of retraced back all the way to their pre-DeFi craze levels, right? And this has continued even since this sort of market drop here. So how are you reading this chart at the moment, Max? The fact that we've kind of risen once again above the 59 mark, and we're now strongly in the 60 plus territories,
Good question.
percent plus territory for Bitcoin.
Yeah, let me then share. I was just.
Oh, you want to share something?
Oh, yeah. Well, yeah. I didn't
Yep.
prepare talk much because I was busy today with some meetings. But yeah. So we need to talking about Bitcoin dominance. You know, it's always like a long-term game. That's why someone is typing. I don't know who is it.
It could be Brian, I think.
Yeah, could be our brother Brian.
Yeah, Brian, if you can mute your mic.
Yeah.
Yep. I got you.
So it's a long-term always discussion where we see, okay, the cycles between Bitcoin and altcoins, where we're trying to play this game in mid to long term, or actually Bitcoin, Ethereum, and altcoins, because Bitcoin and Ethereum now are kind of two measures. And the bigger the picture is always the best visible on daily, where we identified around 61, 62. There is a very important line where there was a breakout, or first could not break, then went down, tried to break up, couldn't possible. We touched it many times. And as we were talking last time, we just went below it. And we expected, or I still expecting it to go all the way down to 56. So what market did since then, it's a kind of try to go up, but at the moment cannot break above 62. Yeah. You see this red line is what you see if you take a daily chart. This is a long line where was support, now broke, and we are kind of in this area. Having said that, this area, which is in a green color, Bitcoin dominance, it's generally very strong support for Bitcoin, I believe. So I do expect it to go down to 56 or 54. I would like to see it there. This is what typically should happen. But the minimal requirement is achieved. Yeah, normally if you go 5 waves up and then you correct it, you should go in the area of wave between waves 3 and 4. We are there. Yeah. And yeah, taking into account that we basically experienced most of the hype in DeFi space, which was Ethereum related, I don't expect much more to happen there. One could make a call, okay, that's it. Now Bitcoin will take it over. Yeah. So it's open, like 50-50, I would say. I still want to see Bitcoin to go lower, just because typically this kind of hype like with DeFi space will not die so easily in crypto. We still did not finish saga with Uniswap. We are looking at very carefully, maybe consider to go long. And now in Binance doing the smart chain, and Neo is launching the Flamingo. Like everyone now to try to claim piece of the pie. It's possible. It's still possible that the risky money will play it once again, and they will not flow back to Bitcoin, but try to play this game with big Uniswap, iFi, Binance, or on top of Binance, many projects are launch on Neo. So no, not close opportunity yet, but yeah, in the midterm, Bitcoin will reclaim the territory. So this is about dominance. The interesting story is how we at the moment look into latest price actions in Ethereum and Bitcoin. And when I'm showing that, I'm not on purpose not using many of our metrics, because I think Brian and Dina mostly cover it a lot. But I might use a few of them just to see how we connect the dots. After this move happened, I think it's better to see in Bitcoin. Yeah, where we see, okay, well, it's one of the most clean 5-8 patterns. Normally, we would expect, okay, it's just beginning of the move, and there should be one more thrust down to 9,000, maybe 200, then correction to 9.8, and one more last just to finish the move. Yeah. So this is what I would normally expect, and it's maybe 60% of what I'm expect to happen. But it's possible, also possible, sometimes this last move, if we take it in a longer time frame, yeah, here, or especially in Ethereum, it could be that we have this one strong move, correction, and second move, and that's it. It's a kind of fell short, a little bit short. Typically, you would see it going lower, but there is a 40 to 30% chance. That's it. Market bull sentiment of the market is too strong. It doesn't allow market to go too deep. So difficult situation we are at the moment. And I don't have, unfortunately, right now any high confidence call saying that, yeah, from everything we see, social sentiment on chain metrics and price structure, it gives us strong confidence. Okay, that's it. We will start growing. Or no, we need more clash. It's like 40 to 60. I'm still 60 for decline and 40 to recover, but that's the maximum we can say. Price areas to observe, we're observing. It's like 380 to 390. If we can break above it in Ethereum, and there is a corresponding here in Bitcoin, it's around 11,200. The most important part, if we break it above it, is just to see the mood of the crowd. If we don't get excited, it's still at least partially concerned, all good. Then we will change to full bullish statement. But if again we see the mood which was clearly to observe around the stops last time, like everyone is getting quite happy and hoping for Ethereum 2.0 coming soon, and the next wave of DeFi or DAO projects flooding the market and reclaiming the tops. We will be forced to stay bearish. And just understand the principle. If we break important points and on the way up, and the mood flips to bullish, not really a good sign. If we're still concerned, stay concerned, very good sign. So this is, I think, the maximum which we can say from the current state of the market. And to see on the data level, if we stay bullish, not one wave to be on Bitcoin, see fountain rate. Yeah, I think we checked it today in the morning. Yeah? It was very interesting to observe.
Yes, we did. It was negative and has been negative for a while. And if you look at maybe 1 year or a year and a half, usually these sort of negative values have coincided with the short-term breakouts. So it's one of the many. So yeah, the funding rate, that one. Yep.
So if Imagine we go keep climbing up, and we still see negative rates. Yeah, we will probably have to issue a stronger bull signal. The reason for it, negative funding rate means that shorts are paying longs. Means shorts are so confident, or as opposite, longs are so unconfident. No one is wanting to long the market. And if you see this kind of pattern on a growing price, this is one of the best things you would imagine, would be hoping for. Doesn't happen so often, but actually one of the best wall of worry. This is what you want to see in the market. Yeah, last month I think this is what we saw. Here difficult to see, but on some other charts we saw that the last climbing up from this bottom at 10.2 till 10.7 was a little bit some wall of worry.
Yeah, I mean, you can also see September 14th, or what was it? Kind of this, yep. And similar on September 3rd also. So
yeah. When the price is growing, but people trying to short it intensively, well, there is a good chance they are wrong. Yeah. Anyway, this is a summary or answering the question about dominance. And maybe Dina, you can show. Actually, I'm also interested a little bit. I didn't check it for some time. Social dominance. What is the split for social dominance between Bitcoin, Ethereum, and some other topics in crypto?
Yeah, we can do that.
Yeah.
Let me present. Also, there's a question which is more esoteric, but Max, I know you like answering those.
Esoteric, yes.
Yes. There's a question whether we think that the correlation between the sort of the Bitcoin and the S&P 500 is going to last forever. Over the past couple of months, and maybe even like 6 months or so, it has been quite high. It does tend to kind of decline at certain junctions, but overall, like I was already preparing IOTA because we had a question.
Yeah.
Guys,
let me answer this question because the answer is simple. I mean, it's esoteric, but I will try to keep it simple. Nothing stays forever, never. A correlation is doomed to be high for some time and then low and then negative. So we always need to keep it in mind. Things are constantly changing. These cycles of correlation between classic and financial markets. If I knew this question would come, I would prepare and run our Python script just to show it on the real data. How maximum every half a year the cycle changes. Yep. So now, yes, we are very correlated, expected to happen that we will decouple, be it S&P growing, crypto not growing, or be it, as we all hope, crypto is pushing and S&P is lagging. Yeah, I hope for the last one. Yeah. So short answer, no, correlation will not stay, and don't expect it to stay for a long time. It's only correlated when we crash. Yeah, then it's very good. Most of the time, nicely correlated. Yeah. But even crash doesn't stay forever, so it also changes. So this is a short answer. Yeah.
You can find the chart, Max, that we used last time, so we can kind of show it. But when you kind of compare the all-time correlation between Bitcoin and S&P 500, it's not a straight line. It's not a monolith. It's not a simple pattern. Like there are ups and downs in their respective correlation. And yes, over the past couple of months, I think there has definitely been a sort of very high correlation at about 0.7 to 0.8 on the scale from 0 to 1 in terms of their shared correlation. But I think this is also just due to general, market-wide and worldwide financial conditions. And I don't also expect this to continue to, permeate in the next couple of, years, but also maybe even in the next couple of months we might finally start to see the breakout between Bitcoin and S&P. But this is in no way something that is that has been the case throughout Bitcoin's life cycle. It's been the case for the past couple of months, but if you look at the correlation, and if Max finds the chart, I'll share it on the screen. If you look at the correlation between BTC and S&P 500 over the last 10 years, it's been up and down, up and down, up and down. Unfortunately, Bitcoin is not yet the safe haven asset that we thought it was. This has been proven time and time again. The last couple of big sort of drop-offs, even the one before this one on Black Thursday, definitely cemented, at least in my head, the idea that Bitcoin is still very much sensitive to general market-wide trends and worldwide financial trends. So we're not completely decoupling anytime soon, but at the same time, this is naturally going to break out. This sort of correlation is naturally going to break out over time, go up and then go down. Now, guys, if you have any questions or for different coins that you would like us to cover, we're doing that right now, and we'll be doing this for the next 10 and 15 minutes. So let us know in the chat. The one coin that I've seen being requested was IOTA. So I wanted to show a few social metrics for IOTA. We unfortunately don't have on-chain data for IOTA because it's not an ERC20 coin. So as you may know, our on-chain coverage focuses mainly on Bitcoin, Ethereum, ERC20 coins, and other top cap assets. So Litecoin, XRP, EOS, although we're deprecating EOS data, BNB chain. So those top 10 coins, we probably have most of them covered in terms of on-chain activity, but the smaller blockchains, we're still kind of considering which ones to add as far as on-chain data is concerned. So for IOTA, currently we don't have on-chain data, but we do still have social data and the amount of mentions and general sentiment towards IOTA over the past, over its life cycle. So I wanted to share some interesting patterns. Go ahead.
I found the chart for correlation.
Okay.
Let me share it.
Share. You wanna?
Yeah, I will share my screen.
Share screen.
Can you see it?
Yes.
Sorry, it's our Python notebook. So the first chart you see, it's 30-day correlation between Bitcoin and S&P. Okay. And as you can see, indeed, actually it was even higher than now, some 1 month ago, 0.8. And we're in the high range, by all means. But you can see on the chart, in the last 4 years, it was completely negative quite a few times, and it's changing. You can see it's going up and down, going up and down. And quite some time it stays around zero. It means there is no real correlation. And now the same blue line is correlation, orange line is the price of Bitcoin. So you will see that, high correlation most of the time happens when Bitcoin decline. So we have high correlation. But on this chart, it's even more visible how we kind of going from very high correlation, check from the left on the chart, 2016, July, then going down, and then climbing up, down, climbing up, and going up, and then going down. It's changing all the time. So at the moment, we're on the top. But just looking at this specific chart over 4 years, I think it's pretty reasonable to assume we are a few months away to decouple correlation again. This is how cycles looked in the last years. And just let's get ready and let's see who will move faster, Bitcoin, S&P. I believe S&P, I believe Bitcoin, crypto in general, they by definition much faster. Less capitalization, less regulated market, a lot of exciting stuff happening, and it can move very fast. So it will decouple, and Bitcoin and other cryptos will move again faster than traditional markets. Okay.
Yeah, and Max, when we actually did a back test on this and added all of these individual day correlations together on an average basis, it came out to almost exactly zero. It was within 1 on either direction, or 0.001 on either direction with how close it was to zero. So there really is almost zero correlation between the S&P and Bitcoin. Many people believe it's inverse, but it's not that either. There really is just zero correlation if you go
this is I think the magic of 2 big numbers. So if you average everything, yes, but if you do it, you look closely, there are periods of time very tight correlation. Most of the time when they fall down. There are also time of very tight correlation when everything is growing. It's when liquidity is being pumped in the system and there are specific conditions which allow everything to grow. You can see on this chart, 2019, maybe around May, everything was growing, S&P and Bitcoin. Yeah. And there are periods when it's opposite correlation, like 2020, beginning of this year. You see that Bitcoin was pumping up and crypto in general, where classic finances were like struggling to do anything. And this is where we went to opposite correlation. Yeah. So, and a specific and under esoteric definition, when you try to understand why is and what is moving and why, and especially inside the crypto, is it majors or some newly establishing trends like DeFi and under DeFi, all this liquidity? You also know that, okay, it's very short time and it will stop because we need to correct all our crazy pumps. So there will be always period of time tight correlation and decoupling, tight correlation, decoupling. The system is like our universe 12 billion years ago. It's expanding very fast and it has its own cycles. So it's just as we go through the cycles, we understand more and more. But clearly the cycles in the crypto are much faster, much more volatile than classic finances. It's slow, slow,
Yeah.
but it's basically dying star. Be it white garlic or red garlic. I don't know exactly definition of this dying stars, but yeah, it's a dying star. Okay, I think I give it now.
Thanks, Max. Yep, great overview. Okay, I think I'm already sharing my screen. Yes, my screen is still visible. Okay, so basically IOTA, right? I wanted to show just briefly some social metrics for IOTA and how they correlated with the coin's price over the last year. Screen is not visible. Okay, resume my presentation, resume presenting. Let's see if this works. How about now?
Good to go.
All right, good. So IOTA, right? This is the social volume for IOTA over the last year. So IOTA, basically what we're seeing here is the amount of IOTA-related mentions on over 1,000 different crypto-specific social media channels. So we have a list, a curated list of over 1,000 different channels. This includes Telegram groups, crypto subreddits, Discord channels, Twitter accounts that are relevant to crypto. Just overall, we're trying to find any social places and gathering spots where people talk about crypto mostly, and then we track that text data and plot it on a variety of different metrics or create a variety of metrics upon it. So this particular chart is showing the amount of mentions of IOTA over the past year, and we can definitely see how a spike in the general interest of the crypto community towards a coin tends to coincide with local price stops and incoming corrections. It happened here in the February of 2020 before the correction, and then it also happened here for IOTA more recently in August of 2020. If we look at an all-time sort of, let me zoom in a bit. Yeah, we can also see similar spikes on a larger scale here during its all-time high in 2018. Then once again, a noticeable spike when we bounced back here before a correction, and then more recently, let me zoom in a bit to show you, we've also seen similar spikes here before this sort of consolidation period here, and then once again around the 2019 high for IOTA as well. So in general, what we don't want to see is large groups of people talking about a specific coin. No matter how much that might sound counterintuitive, when you see these types of spikes, especially when they correlate with a rising price action, that means that in general, the crypto community and the mainstream speculative community is starting to pay more attention to the coin. FOMO kids are coming out of the woodwork. In general, fear of missing out is starting to permeate all of the discussions, and we're reaching these peak hype moments where the whales usually start dumping on the crowd, and there's irrational confidence about the market's short-term potential, which drives in general the price downward. Especially when you see, like, if these sort of levels of social volume were able to sustain itself, that would be a different story. But this was just a very brief spike in the amount of mentions and hype towards IOTA, and then as it started to dissipate, meaning that in general the crowd started to move away from this coin, lose attention and interest, there was not enough fresh blood to keep pumping the price upwards, right? Fairly straightforward. So what we've seen here in August of 2020 is pretty much the same idea. IOTA was once again being hyped up a lot as far as coinciding with its 2020 high, leading to a short-term price correction here, even before the market-wide crash. So the market-wide crash was here, but IOTA started correcting even sooner. Now, as far as more recent data, this is what we want to see, at least as from a social perspective. We want to see these normal pre-pump levels of social interaction and social mentions of a coin, meaning that the general mainstream community is not paying much attention to the coin. These mentions are usually IOTA fans and people that are already kind of high on the coin in general. On the other hand, I also wanted to briefly show the social sentiment towards IOTA, because I think it's also quite telling. So we can see several spikes in social sentiment. This is for the past year. We can see several spikes in social sentiment coinciding with short-term corrections. This one before the February drop-off, this one before the June 2020 correction and consolidation period, and then once again we saw a rise in positive or bullish sentiment towards IOTA before we started correcting in August. At the moment, we are fairly bearish as far as the general IOTA sentiment is concerned. And if you've ever listened to any of these videos or read some of our insights, we generally tend to believe that bearish sentiment, and Brian mentioned it earlier on BTC and Ethereum, bearish sentiment usually tends to be the zone from which coins start breaking out and start recovering. There's not a lot of hype around the coin, leaving it room to grow. There's not a lot of confidence in the coin's market action as far as the general sort of market consensus is concerned, once again providing fundamental support for a sustained price rally. So from a social perspective alone, IOTA is looking okay. It's looking solid. Once again, we don't have on-chain data for IOTA, so I wouldn't go and just say, this is super bullish or super bearish. From a social perspective alone, we're good. Like, use technical analysis and other, if you can find on-chain indicators for IOTA that in order to kind of make a more informed or like comprehensive decision. But from a social perspective, we're looking fairly okay. So before I move on to one other coin that I saw people mentioning in the chat, guys, anybody that's still on the call, please don't forget to like this video and subscribe to this channel. And if you want to be my favorite person in the world, also leave a comment after the call. All of these things, I know a lot of people say it, but they keep saying it because it's true. YouTube cares about this stuff quite a lot, and we want to make sure that we can continue to make these videos and let YouTube know that they should share it with more people so that we can grow our community and get better ideas and more feedback on our charts, metrics, and tools altogether. So be sure to like and subscribe to this channel during the call. And then finally, let's look at ZEC, right? That's Zcash, the private cryptocurrency, and what we can look at as far as one other thing that I wanted to show from IOTA. Sorry, before I move on, is IOTA's development activity. So this is something that you want to see for a coin. This is not a short-term indicator, but if you're doing a due diligence on a project, this is a good looking chart. What you're seeing right now is the amount of resources that the IOTA project has invested in coding and generally pushing code and publishing new features, updating their product and working on their roadmap. So we can see sort of a strong move from the ICO days into 2018 and 2019, and the general development activity levels, obviously they ebb and flow, but they remain constantly high. This is something that you want to see for a coin that you are interested in long term. You want to make sure that they're actually working on the product continuously. It's not an exit scam. They have a dedicated developer ecosystem, and they're working on making their product better. I know IOTA also had, I think, a Chrysalis update that they mentioned a few days before. So this is probably, this spike is probably connected to the Chrysalis update that I've seen somewhere on Twitter. So yeah, not going to help you a whole lot with figuring out when to exit or enter a position. But if you're doing long-term due diligence, this is a great metric to look into. Okay, so finally, ZEC. I think, Max, you've already made some comments on the ZEC, right? So do you want to...
just about socials, that our algorithm will not work. The amount of data is too low.
Yeah.
But only social volume. Yeah, we can check. Is the best. I gave an advice. Actually, it would be cool if someone who is in the ZEC community can follow it up for a few days or 1 week and can tell us next week his summary. Does it fall into one of the category? And generally, emotional categories are not many, 5 or 6. Either stressed, depressed, or relaxed, euphoric. Yeah, I don't think any of them. But who knows? Maybe they're depressed because of, I don't know, no new updates, or maybe excited because there are new updates coming. And maybe they're very quiet or unusually quiet on social volume. But as I see from the chart you're sharing, it's normal volume, nothing special.
At the moment it is. So yeah, this is the yearly view. We see once again similar spikes in social mentions around the tops. Here, I think a lot of people thought that this was the top for Zcash, which it was briefly, but we managed to bounce back even higher. We saw another sort of string of spikes here before the August correction. At the moment, I think these are just average levels. Maybe if I increase the interval to 1 day. Yeah, so not a whole lot of talk connected to Zcash at the moment. Once again, ideally we would have a request for coins that are ERC20 that we can look into on-chain data as well, but we can always look into social metrics for all because we have them for all of the coins. So if you are content with your TA analysis and other indicators that you are using to evaluate an entry point, good. If those are showing you that there might be a potential for a bounce back, Zcash's social volume can support that at the moment. So Zcash's social volume is good enough or low enough to support another push upward. But once again, I wouldn't only rely on this metric to ensure my entry positions. I would definitely consider or consult with other TA indicators and on-chain indicators as well. Okay, one final thing, I'm just going to plug it before we end. If you are not a Sandbase Pro subscriber, so pretty much everything, guys, that we've shared and shown today during the call is available through a Sandbase Pro subscription. You get 2-week free trial, no credit card needed or anything like that, to look around the entire platform, play with all of these metrics and templates that we have shown you, and also read our exclusive insights. So we also have recently started making or writing weekly pro reports. This week's report is going to be on Uni's on-chain activity, its current sell-side pressure, and short-term potential. This is a very, very in-depth piece into the current ecosystem of Uni, where it might be at the moment, why it crashed, and how you could have seen it coming in terms of its on-chain data and general, as well as social activity, as well as where we are now and what might happen next. So if you are into reading and generally getting to know a specific coins ecosystem in and out, if you are considering maybe moving into Uni yourself, I think this is a must-read report. And it's going to be available for all of our Sandbase Pro subscribers today on our Insights page, probably in about 2 hours once we publish it. So don't forget to, if you're not already a Sandbase Pro subscriber, don't forget to activate your 2-week free trial so that you can read this one and other insights that we publish on a daily basis. And I'm just going to end it at that because we're already, I think, around 10 minutes past an hour. Yes, we are. Guys, everybody that has stuck around to the end of the call, thank you very much. Please let us know if you would like us to change anything in the format of this video, if you would like us to do more sort of audience Q&A and less of our prepared material, if you would like this to be more of an impromptu sort of, chat where we just come around together and we answer a bunch of community questions, or if you like the current format where we start with a number of topics that we have prepared ahead of time and kind of general market overview, and then we ended with some audience Q&A. If let us know in the comments what you would like to see next as far as specific projects covered, and we can maybe prepare something ahead of time for next week as well. If you, as I mentioned at the beginning of the video, if you don't want to wait until next week to talk to us about the general market conditions, join our Discord. There's a general channel that we use to talk about this type of stuff and share interesting patterns all the time, pretty much every day, and talk with our community about what we're seeing on the market. So the link to a Discord, Santiment's Discord server, is going to be in the description of this video on YouTube. Make sure to join our community and just chat with us on a daily basis. That's going to do it for us this week. I would like to thank Brian and Max for sharing their insights about the market today as well. And to everybody else, I will talk to you all in 7 days.